Good morning, Paul Georgie from Allendale. It's September 26th, Monday morning, and we've got a little bit of hope in the markets here this morning as corn overnight was higher, wheat a little higher, soybeans were still under pressure as a continuation of last week. But the biggest problem that we still have is global economic concern, summed up in just a few words. Is Europe going to back Greece? Are they going to back the banks? That is the big question. There's talk that if they do back the banks and give the support there, that Moody's will downgrade some of their ratings, which it can't be good. So it's a very, very tense situation in Europe on which way they handle this problem. And the G20 had got together this weekend. No real decision that come out of that meeting to provide stabilization for the economic news. Markets were extremely oversold. We're seeing a bounce in the financial markets here this morning. Stock market indexes are higher, suggesting we could see a day of evening up here, profit taking by the shorts to support this market. However, we don't have too much financial news here this week. We do have new home sales out today. We've got the Fed has got several speeches today. There's 3 of those projected today, and also Treasury Secretary is expected to speak today. So sometimes speeches can have much more of an impact than the actual reports and U.S. data. So watch that very closely. Also, we had overnight, or on actually Friday after the close, the CME raised margin requirements on gold, silver, copper, as much as 20% higher on gold. So that caused a sharp drop in gold prices here overnight, and we did rebound from those sharply lower prices at one time here. But the thing that we also have to remember is we're moving into the end of the month. We got the end of the month, end of the quarter ahead of us. Margin clerks are going to be working hard this week to get the margin calls collected because of at the end of the month, the FCMs want to have the least amount of long margin calls on the book. So therefore, they are going to be very adamant about getting money in here and getting out of these positions, and that could cause some liquidation as we go further liquidation, I should say, as we go into the end of the month. As far as actual fundamental news, we'll be watching for USDA reports here this morning at 8 o'clock. If we get any more export sales, that's really the key right now to trying to find a bottom in this grain market. When will the countries that need grain come in and make purchases, especially like China? Are they going to buy corn? We've been waiting and waiting, and the pressure that we've seen in the futures market now gives U.S. corn an advantage to be shipped into the country of China. So we're monitoring that very closely, and I think that could have an impact and give us some idea that maybe prices have gone low enough. However, as we mentioned last week, the CFTC Commitment of Traders report that was out on Friday, we wanted to watch that and see if there was liquidation. Well, we did have liquidation. We had 38,976 contracts by large traders that reduced their position size. The only problem is that they still have a net long position of 286,000 plus that is being pushed and possibly creating more reason for liquidation as this market moves down, because they have margin requirements as well as the retail public, and they will want to liquidate those positions. So it looks like to us on any kind of rallies here, we should see some more selling by the managed money, by the large traders, since they hold such a large long positions currently. Harvest is beginning further north. We had a local producer harvest corn here over the weekend, 22% moisture, and yields were very good, or average is what he calls it, but on some irrigated land. So the yields, I think, are two-sided. If the producer's bullish, his yields are not as good as what he expected, and if he's a bear, they are better than expected. So those are normal things. We'll have to wait till the USDA gets their numbers together on a monthly basis here to follow that. But we do have grain stocks report coming out on Friday, and that's going to be a significant report as we move through this week. And once we get that report, right now the trade seems to have a sentiment that this report could be bearish, that the U.S. is going to say we didn't use as much grain, and therefore our stocks are a little bigger. So we'll have to see. We would expect that the USDA could tighten stocks, because that's they made the big adjustment in June of the larger numbers. A year ago they did the opposite. So we'll have to monitor that. This could be a big report and a significant market mover after this report on Friday morning at 7:30. In the livestock trade, we did have the cattle on feed report on Friday. It's considered as bullish. We're calling livestock higher here this morning, especially with the outside markets and the stock market being up, stock indexes being up 100 points. We could see cattle prices anywhere from 50 to $1, maybe even $1.50 higher, as the cattle report was fairly bullish. The placement number, only 99% of a year ago. Trade was expecting 108%, and marketings were good as well. But the placement numbers, it shows that high corn prices actually deterred placement of cattle, because the heavier weight cattle placed were less than a year ago, as much as 18-20% less than a year ago. But the lightweight cattle, 600 pounds and less, were 44% above a year ago, suggesting that the producers, the feedlot managers, willing to put more roughage into these cattle, less corn right up front, and hoping that corn prices get cheaper as they go forward. So looks like it could stretch out the numbers a little bit into April, May of next year, and even out some of the valleys and hills that are anticipated in this cattle trade. So stay in touch with Allendale Research. We'll have a lot more details for you this afternoon on our research meeting, and I'm sure Rich Nelson will have some great ideas for you. The choice cutout was down 115, select down 119. We're in a time here where we could see a little bit reduction in demand in beef. Pork cutouts, however, were up 33. So hopefully the export business continues on pork to support us as we go into a time where supplies are larger there, and it could. And seasonally, we look that pork prices could be lower and work lower into that October time frame. So if you got any questions, give us a call here at Allendale, 800-262-7538. We expect a pretty choppy week and a very volatile time, sharp moves in a very short period of time. So stay in touch with Allendale's research. We'll help you get through this thing, and we wish you a very successful trading day. And I'll talk to you tomorrow morning. Thank you.